Today's, of course, the last trading day of the year, and the financial markets have barely hiccuped as you look ahead to 2006. Kind of a mix of caution and optimism. So here with a look at the events that shaped the markets in 2005 and how they might influence what comes up in the coming year, we're joined by market historian Bryan Taylor, president of Global Financial Data. Bryan, Happy New Year. Good to see you.
Happy New Year to you, Sue.
All right, it was an interesting year to say the least. I mean, a difficult year on many levels for many people, whether you're talking about their personal lives or their financial lives.
Right.
What stands out to you as in your line of work as the key points for '05?
Well, the key, I think, was the flattening of the yield curve, and that kept the markets from really going forward to the extent that they should. The market barely budged this year. It was only up 3%, and this follows a relatively mediocre 2004 as well. But, you know, after you have a large bubble like we had in the 90s, and the markets generally will settle down for a few years and not go anywhere. So, you know, this is sort of how markets behave after a large bubble.
So this is not unusual?
No, not at all.
Yet we did see some anomalies within that, most notably perhaps energy prices.
Yes. In the energy market, you had a combination of forces that drove the energy prices higher, the oil prices in particular. You had the lack of refining capacity here in the U.S., you had low stocks of oil, and that combined with the fears of what was going to happen to the Gulf refineries drove the oil prices up to $70 at one point. And, you know, it's not a coincidence that the oil pieces peaked right at the time that Katrina hit, and then they've come down since then.
And that would make the energy complex, I would assume, one of the best performing sectors.
Oh, it definitely was. I mean, it was up over 30% this year. And not only here in the U.S., if you look at foreign stock markets, for example, the markets in the Middle East, they have gone up tremendously. In fact, they're up 5 or 6-fold over the past 2 or 3 years.
What about the world markets? Because a lot of money left the United States to pursue gains that could be found in world markets. What do we know about, or what does history teach us about how those markets might perform in the new year versus how they have in the past?
Well, it depends upon the particular world markets. If you look at the emerging markets, they were pretty much ignored in the 1990s as the developed countries did extremely well. Now just the reverse is true, and the emerging markets are up in some cases 100, 200% over the past couple years. In fact, they're displaying the bubble tendencies which the NASDAQ displayed in the 1990s. So I think at this point you'd want to be cautious about going into those markets because most of the gains have been made there. You would want to stick with a market such as the United States because you're avoiding the risk of the bursting of the bubble, which will probably happen in the next year or two in some of those markets. Even
if the yield curve here in the United States stays flat or inverts in a meaningful way?
Yeah, I think that's true because if you look at the United Kingdom and Australia, they've basically had a flat yield curve for a few years here, and their markets have continued to move forward, not dramatically. So the fear that a flat or inverted yield curve is going to lead to a recession and a bear market just hasn't proven true in those cases.
What does it mean, though, for if it does invert for the mortgage market?
Well, I think that as long as it stays flat and the long-term rates remain low, that will keep the mortgage market from having any dramatic bursting. I mean, the real thing you'd have to worry about would be that the long-term rates would start to increase, and that would cause a dramatic burst. But if you just have a flat yield curve here at the current rates, you would probably have a mild decline in the mortgage markets, but not the big bursting that a lot of people fear.
All right, Bryan, Happy New Year. Thanks again.
Thank you.
Bryan Taylor, president of Global Financial Data.